every time we will do a transaction, it will involve two parties. Two parties. One will be the person who is selling the goods. The other person will be the person who is buying the goods. So every time there will be two persons involved. This is known as the twofold accounting concept, where there will be a give and take. Some person will give, the other person will take the same thing. What is the meaning of source document? Source document is basically a document. Source document is basically a document which at the time of doing transaction. Suppose I just told you a person who is there in the business. Suppose he is selling the goods. Obviously, he will make the bill. In the bill, he will write, I have sold these items to this person. I have sold these items. This is the amount. This is the source document with which we have to make the journal entries. With then only we will be able to make the entries in our journal books. Okay. So let's see it. Market along with your father to buy a computer. Suppose you go to a market along with your father to buy a computer. So what will be the scenario? Obviously, when you go to the market, there is a shop, suppose XYZ shop. There you find the computer which you want. When you buy that computer, you will get that bill. Let's read it out. The dealer gives a cash memo of that computer, and in exchange of your father makes a cash payment of 35,000. Suppose what's happening? This is a businessman. He owns a shop. What does he own? He owns a shop. This owns a computer shop. And this is you who is going with your father to the shop in order to get the computer. You went there, you asked for a computer, this person delivered you the computer. Suppose the computer which this person delivered to you was of rupees 35,000. So now what will happen? Obviously, when you have that computer with you, you will have to pay the amount of that computer as well. So you and your father will pay 35,000 rupees to this person. So this person will issue an invoice. This person will issue a cash memo that you as the customer have purchased a computer from me. Okay. So it will be the proof that yes, I have purchased the computer. If at all something goes wrong with that computer, if at all there is the lack of speed in that computer, you will go back to the this person, and you will say, see, this is the proof that I have purchased the computer from you. Just repair it. Just do the necessary things what you want. Okay. So a cash memo. This cash memo has two things. That is, first is the original receipt. Within the back of this is the carbon copy. Carbon copy simply means when you will have a receipt where there will be written, yes, you have purchased. This will be given to you and your father. You will keep that, and the copy of the same will be kept by the shopkeeper as well for his records. The original document will be given to you. The copy of that will be kept with the shopkeeper. That shopkeeper, with that only the source document, he will be able to do the transactions. He will be able to record the transactions in the journal entries. So let's see it. So purchase of computer for cash is an example of transaction which involves reciprocal. Reciprocal simply means, what does that mean? I am purchasing the computer is coming to me, and the cash is going out from me. Okay. So exchange of two things. Every transaction will involve two things. Payment of cash. Obviously, your father paid the cash, and the delivery of a computer. The person delivered you the computer, as we have already seen in this example. Okay. So the transaction involves this aspect, that is the give and take, which we did in the previous slide. Okay. So what is the cash memo? Let's see the cash memo. So this is basically the cash memo. Now, this is a transaction voucher. First, we have to write the name of the firm. What is the name of the firm? Suppose that the firm name was XYZ Computers. So it will be written there, XYZ Computers. This is the name of the shop. Then voucher number. Voucher number. What is the meaning of voucher number? With which voucher did he record the cash, incoming of cash? So we have to record the voucher number as well, because he is receiving the cash. So first we'll write the voucher number, suppose say 01. After that, we will specify the date. Suppose the date is 26th of August 2024. The date will be written. After that, the debit account. Debit account, what is to be debited and what is to be credited. We will be seeing this in few further classes, but just to make you understand, suppose debit item is what? Computer. Suppose the debit item is computer. Second credit item is the cash. Okay, whatever. These are the items which are to be recorded. What is the amount? 35,000. Narration simply means a summary. What is happened here? Next, authorized by, this will be signed by the person who is doing the, who is selling the goods, and prepared by, who has prepared this thing will be signed by that, so that this can be made a proper proof. This can be of a proper establishment. Yes, there is a proof, there is evidence. We have bought, we have sold the computer to that concerned person. Okay, so this is the source document with which we start the journal entries. We start the recording part from these source documents only. Okay, coming next is basically payment of cash involves give aspect and delivery of computer aspect. Okay, so as we all know, transaction involves two things. First is to give, the second is to take. If I talk about the business entity, the XYZ computers, what is it taking? What is it taking? It is taking, the business is taking the cash, 35,000 worth of cash he's taking. And what does he give? What is he giving out? He is giving out the computer. So he is giving out the computer worth of rupees 35,000 only. So this is basically the two aspects, the give and take. So it has been written there. The payment of cash involves give aspect and delivery of computer aspect is a take aspect as concerned with that customer. There are two persons involved. If I talk about the shopkeeper, the give and take will be just opposite as compared to the customer. Just don't confuse in between these. You as a business person, you have to record all the transactions concerning the business person only. You are not doing the transactions, you are not recording the transactions in the book of your customer, but you are recording the same in your books. That is the business entities book. Whenever you have to record the transaction, whenever you have to imagine each and everything, just don't imagine keeping in mind you as a customer, but you should record, you should analyze, you should just check in the form of, in the point of view of that person. That is, who is the person? The business entity or the business owner. Then only you will be able to record the transactions. Okay, now the second is, business transactions are exchanges of economic consideration between parties and have twofold effects recorded at least two accounts. Now, what does this mean? This simply means every time we will do a transaction, it will involve two parties. Two parties. One will be the person who is selling the goods. The other person will be the person who is buying the goods. So every time there will be two persons involved. This is known as the twofold accounting concept, where there will be a give and take. Some person will give, the other person will take the same thing. Is that clear? So it says business transactions are exchanges. Now, what are we exchanging? Obviously, we are exchanging the economic benefits. The first one is the amount, the second one is the product. So this is how we exchange two of the items. Next, they have twofold effects as we just saw. Next, business transactions is evidenced appropriate documents, cash memos. So what happens? Each and every business transaction involves the writing down of the things, items, or the amount which has been paid, which has been given. Each and everything has to be written, with which this becomes the evidence that these all transactions were taken place. So this is how it is basically evidenced. How come it is evidenced? What is to be made? We can make the cash memo. We can also make the invoice, the sales bill, the paying slip, check, salary slip, etc. That is, whenever you get the check, whenever you deposit the check into the school, whenever the business pays the salary through check, this check is basically the evidence. There we write it down in the front page of that checkbook. that this check number was issued to this person with the amount this on this date. So every time there is a check and the counterpart as well. Whenever you might have gone to the bank when to deposit the amount, what do? There is a slip which has a cutting in besides that. So in the cutting, you write down each and everything, and on the main paper also you write down each and everything. So when you deposit the cash, you give this slip to the banker. He will tear it off the counterpart. He will sign it and acknowledge that yes, we have received so much amount, which will be credited, which will be done in your account, will be deposited in your bank account. So every time there is a transaction, two things are involved: the counter slip and the main slip. So whenever the invoice is made, whenever the bill is made, there is an original copy and a carbon copy just besides that, so that the original copy can be given to the customer, and the counter, that is the carbon copy, will be kept with the shop or with the business for the recording of the transaction. That acts as evidence, that acts as a source document. Is that okay? Next, document which provides evidence transactions is called the source document or a voucher. As we just saw that that evidences, the documents are known as the source document, because from that only we will be able to record the journal entries. We will be able to record the transactions in our daily journal books. Okay, so this was basically how do we identify what is the source document from which the transaction have to be recorded in the journal entries. Next, so the source document, no documentary certain items. For certain items, no documentation is required when we are doing the online transactions. In the case of petty expenses, for example, if I paid for the purchase of tea, I wanted to drink the tea in my business, I'll pay for that. Obviously, the tea shop will not issue an invoice. So basically, there are no documents for certain items which are of petty in nature. Petty simply means the small expenses. Like if I want to buy a pencil, if I want to buy a rubber pen, I will not get a receipt. I will not get a bill for that. I will go to stationery, I will buy that pen, I will pay the amount. He will not give me a bill for that. The bill is basically given for the big items. Okay. Whenever you buy clothes, whenever you buy computers, whenever you buy, machineries, each and everything, these are the big items where the big amount is involved. Then only there is a need of documents. Okay. Next. So cash vouchers. Cash vouchers are basically prepared showing the necessary details and got approved by the appropriate authority of the firm. So basically the cash vouchers are the vouchers which is prepared by the person who is making that voucher, and it is approved by the bigger authority. Obviously, there is a counter sign, there is a sign done by the higher authority person as to acknowledge, yes, this transaction took place. Okay. Apart from that, it also shows the necessary details of the goods, of the amount, of the date. Each and everything is mentioned in that cash voucher. Vouchers are not vouchers like, when you go for shopping, you get a voucher, 20% off. This is not a voucher. Vouchers are basically the document which can be vouched, which can act as an evidence in order to record the transaction in the journal entries. Okay. Next, all documents, that is all the vouchers, arranged in chronological order and serially maintained. What does this mean? This simply means that all the vouchers are chronologically ordered. That is, they are chronologically kept. Chronological simply means date-wise. That is, the first date voucher will appear first. Then after that, all the vouchers will follow. Suppose there is a voucher which was made on 1st April, then 2nd April, then 5th April, then 8th April. It cannot be like we keep at 5th April, then 8th April, then 2nd April. It should not be the scenario. That it should always be in a chronological order. That is this type. Okay. Next, number. It should be numbered. The serial number should be there. Voucher number 1, 2, 3, 4, so that there should not be any confusion with the voucher numbers. Because with the voucher number only, we record the transactions in the journal entries. If the voucher number is missing, we will not able to record the exact voucher number with which we have done this transaction, with which we are doing this entry. Okay. Next, and kept in a separate file. Obviously, there should be a file which is be maintained that file should be different because that's a source document. From that only the secondary, the recording part is beginning. Okay, so it should be maintained separately so that if at all there's a confusion in future, we can just verify the source document. Next, all recording in books of accounts is done basis of vouchers. Everything is being recorded in the books according to checking these vouchers only. So these vouchers play a very much important role in recording of the transactions. If the transactions have to be recorded, each and everything should be properly kept, properly maintained, serially maintained, chronologically maintained, with the date wise. There should be no confusion in future in finding out the source documents, because whenever there is something confusion, everyone will check the source document. If the source document is only missing, so it cannot be proved that these transactions were done on a biased manner, the transactions were good on a good note, or the intention was wrong. So that's why these vouchers are very much important. Okay, so I hope this is very much clear to you. As we have already seen the voucher, this is a voucher which we already studied in this slide. This is the same voucher which has been presented here as well. Thank you so much.